How we looking? How we looking? All right, we live. We live. Let me get this live chat up real quick. Hold on 1 second. All right, cool. Man, let me get adjusted. Welcome back. TTM Trades. Just gonna do a quick market recap of the week, kind of our expectations, and then how things played out, and how I'm looking at the market moving forward, and just kind of how I plan on playing it. Okay, so first thing first, ticker SPY. Um, we had that strong bounce early on December 6th where we gapped up. And we was holding this level for a hot minute. What I was expecting was for this 469 to 470 level to hold. As the price action was consolidating right here in this range. And we did sort of break through that today, going into the close Friday on a strong volume. Now, just dropping down to the 30-minute chart, I did take puts right here on this initial drop, starting right here. And then when we started running downwards, my expectation was for us to come down to this 150 SMA. And then the following morning, we gapped up, only to sell off back down in this level. And we just kind of ranged in between 469 and 470 throughout the rest of the week. So I kind of knew one or two things was going to happen going into the close. Either we were going to sell off and create that downward pressure going into the weekend, or we was going to break out to the upside. And we did break out to the upside. So I did take a loss on my puts. The best thing I could do was I shaved my position down a quarter, about 75%. When we had this dip right here, I went in closed, not closed, but shaved my position down. And I still wanted to stay into the play. Ultimately, what was killing me, what was hurting my position before we broke out to the upside was pretty much just the overall theta and the vega, right? We're trading options. We know that theta is time. So every day that passed, I lost money on my option as we move closer to expiration. And then just the overall vega, the volatility, we went into this tight consolidation. So by me losing time and there being very, less volatile, less volatility, my options were kind of losing money slowly but surely. So again, like I said, I shaved off a quarter of position, and then when we broke out here to the upside, uh, as we began to break out, I went ahead and closed out my position altogether. Um, so I think this week right here, just trading SPY, we had made a little over $2,000. And then by the time I closed out this position right here, we gave back that $2,000 plus another 1,000. So we lost roughly around 3,000 on this play right here. Small in the portfolio, but again, we lost 3,000. Now, where was my mistake that I made going into this? And I talked to one of my homeboys about this. The biggest mistake was I stayed too deep down into the micro level picture, and I really didn't focus on the bigger picture as I should have, which would have helped me seeing that this was going to happen. Okay. And what I mean by that was, one, we got this first drop right here. Um, just to see us rally back above that top one standard deviation going early into the week. One, that was a bullish sign. Uh, Two was I was waiting on this. Where is that? Hold on 1 second. There we go. I was waiting on us to kind of come back down and get a gap fill uh from this jump up right here, and that never happened. Um so with that being said, just looking at the 2 hour chart, another thing I should have noticed is one, the PMO was already trending up on the 2 hour chart with some momentum and volatility behind it. So we can see that this upward move was strong. And third, when the price action did pull back, it fully recovered this top one standard deviation Bollinger Band, which I always talk about. As long as you hold that top one standard deviation Bollinger Band, the price action could be going into a strong uptrend, like you see here on this day-to-day uptrend that started back in October 12th and kind of ran all the way up until mid-November when we had this recent drop. So we were seeing that on the 2 hour chart, and it held that top one standard deviation Bollinger Band. Each time it dipped below it, it recover, dip below, recover, dip below, recover, and then finally got the bounce off of it to kind of start moving in that upward momentum. With the PMO behind it, RSI above both its averages holding. So there was definitely some momentum behind the move. So I was so deep down into the weeds looking at the micro picture, like going down to the 5 minute chart, that each one of these bounces that I was trying to pay attention to here just made me completely lose sight of the bigger picture. So just keep that in mind, when you're trading, always have that macro perspective along with the day to day. And if you do decide to go down into that micro picture, always be sure to zoom back out and look at your higher time frames and just how you're playing into that overall picture. So knowing we got this strong close going into Friday, with the market completely shrugging off the CPI data today. Going into next week, I do think the bulls will continue this rally. And my plan is to wholeheartedly jump on board this rally. Now, again, what is that overhead resistance as of right now? Still that 374 to 375 range. So first thing I'm going to do going into next week is I'm going to look for a small pullback. Nothing major, because I honestly believe the bulls aren't going to give a strong pullback. So any small pullback that I can find here on that micro picture, as far as the 5 minute chart, any dip that comes back down, I plan on locking in calls for this overall run to the higher highs of 474 to 475. Now, just kind of following the bulls, the majority of the bulls do believe that this will push up to 480, maybe 500. That is the target for the bulls, and we're just going to ride that ride with them. Um, we do know that Jerome Powell speaks on the 15th, which is Wednesday next week. And the market is already expect him to announce that he's going to um, double the speed at which he tapers, and they're already expecting that he's possibly going to raise interest rates. So I think this news is already priced into the market, and a lot of your growth stocks have already had their major pullbacks, and a lot of them are sitting at key support levels. So just with the overall, bulls buying a dip, a lot of your growth stocks already sitting at key levels. I think the overall spot has more room to run to those higher levels, because pretty much after Jerome Powell speaks on Wednesday of next week, there's really nothing else to stop this bull run, right? There's no other bad news unless a news article comes out about Omicron, causing deaths or something like that, something dramatic, or the U.S. goes in a lockdown due to Omicron. It has to be something dramatic. But I think this bull run will continue, and the bulls are starting their next leg upwards. So definitely go ahead and hop on that train, and that's how I plan on playing it. Now, another thing that I also should have paid attention to on the bigger picture was the VIX. Just looking at the VIX overall again, coming down, you can see that 2 hour PMO is constantly trending downwards. That VIX price action is constantly holding below that bottom one standard deviation Bollinger Band. And then even when it tried to recover its 150 SMA, it failed it. And then it started breaking back below that bottom one standard deviation Bollinger Band to continue in this downward trend. All right. And you can see that the price action has been consolidating, in this general level for the VIX. But you can see clearly going into next week with the price action consolidating in the Bollinger Band, with kind of reflecting that there's going to be a volatile breakdown for the VIX to come down further to these price levels of 1538, right where it normally holds in that mid to lower $15 range. So just going into next week, looking at puts on the VIX and taking some calls on the SPY. And then we'll kind of see how the market overall reacts from there. Now, I'm going to be very cautious leading up to Jerome Powell speaking on the 15th. I don't want this to be a bull trap to where, I all in and then Jerome Powell says something that was unexpected and it sends the market into a frenzy. But this is how I plan on playing the next week, and they will be quick in and out trades. Now, there are a few things that I am looking at, a couple stocks that are set up decent. Again, I've pointed out PayPal. PayPal is at its weekly 150 SMA, which is a very big deal. This is normally where big money likes to come in and reposition themselves in the market right along the 150 SMA to 200 SMA. And as you can see, each time it dipped down to this 150 SMA, it immediately got bought up and ran up. So I think this is a nice pullback. We went back and checked to see how far this pullback. It was right around a 42% pullback. So it's at a great discount right now. I would give this about another week or two to consolidate. But if it does dip back down into that mid 175 range, I do plan on locking in some long term calls to take this back to the upside, knowing that those resistance levels are sitting right around 220 to 224, and then right around 260. But I do plan on locking in long term calls on PayPal. Something else I was looking at, Airbnb. Airbnb is positioned nicely. You can see here on the day to day had the strong gap up run here. And then when the SPY overall pulled back, Airbnb pulled back here on the daily. But if you look here on the weekly, on a more macro picture, as Airbnb began to pull back, soon it hit its middle BB, you can see some buying action immediately came into play. And then the following week, it followed through. All right. So with it holding here, this creates a higher low, and it gives Airbnb an opportunity to build some momentum to break out to the upside. The last high was right around 211. So this gives us an opportunity to break out to the upside from right around 180 to again right around 211, if not higher, to create a higher high. So you're looking at about a 30-point spread to the upside on Airbnb if you position yourself just right. Again, I would try to get down in these levels looking at the daily chart, right around that low 170 area. Try to lock in if you can, if you get lucky, down to the 160 area if it decides to pull back right here where the 150 SMA is at for the daily. But Airbnb is positioned nicely. And then looking at Tesla, I'm a little weary on Tesla. Tesla definitely has to hold. If you look here on the weekly chart, it has to hold its top one standard. That's currently sitting here right at 972. You can see here on the weekly that soon we hit that 972 level, the price action immediately recovered this top one standard deviation Bollinger Band and has been holding ever since. Now, again, just paying attention to that level, and with Tesla having a huge following, I'm looking at this. This might be a possible good buy area. If this 972 holds, I would keep an eye on this going into next week. But if that 972 fails, then that will bring Tesla back down to 790, lower 800s. So this 972 is an important area to hold. But if it does hold and you get a bounce off that 972, then that sets Tesla up to also create a higher high and continue its upward trend on a week-to-week basis, which would also be good to lock in some long-term puts since Tesla is finally having a decent pullback to let those who've been on the sideline enter the market and accumulate a couple shares. What else I am looking at is BABA, not for the long term, but we can see here on a week to week basis, BABA is in a very strong downtrend. As you can see here, it's constantly falling below that bottom one standard. And each time it tries to recover, it gets rejected by that middle BB. So again, when it initially started its downtrend and tried to recover, failed the middle BB. Again, tried to recover, failed the middle BB. Tried to recover another time, failed. All right. So as you can see here on a week-to-week basis, it is on a strong downtrend. I think there is a potential for a short-term swing to the upside. If you look here on the 2-hour chart, the price action is trying to consolidate. and it has broken out of its downtrend and broken above that middle BB. And the 2 hour chart is consolidating with the PMO beginning to pick up some momentum. So what I would look at with Baba going into next week, if it gets above that mid 126.50 range, I would definitely hop on board and see how far we can ride this back, ride Baba back up, possibly to get back up to this 145 level, maybe even 150. So there's a nice short term spread on Baba for a possible bounce going into next week. And then once you hit those target areas, I would definitely close out my position just to see how Baba does from that moment moving forward. It's a lot of bad news circulating with uh, Chinese companies, just as far as DD being delisted, and just the crackdowns and the regulations, and everything that's going on in China with a lot of the companies. So again, I got a lot of bad news surrounding them, and then Evergrande just defaulted. So the market overall for China is just a little shaky right now, but it is set up for a nice short term trade. And then I'm also looking at the US dollar. As you can see here on a week to week basis, um, it was on a strong downtrend again, weekly to your right. It was on a strong downtrend, holding below that bottom one standard deviation, never getting above that middle BB. Then finally, the bottom out here broke above the middle BB, and then when it pulled back, it hit that same bottom for a double bottom, which I also like to call the W pattern. First leg down, break above that middle BB to show some strength, and then when it pulls back, it holds, and then start that next leg up. So as you can see here on a week-to-week basis, it did recover its 150 SMA, and it has been sitting on top of it, holding, consolidating. So what I would first see is make sure that this 2570 holds on the US dollar. There's a possibility it breaks that 2570 and comes back down to 2544. If it does, that is a great opportunity to lock in some calls. And as you can see here, just kind of following the more micro picture on the 2 hour chart, you can see that PMO is trending downwards and also showing some consolidation. So there's a possibility that you could get a breakdown here back to that mid 25.50 range we was just talking about here, which would correlate, which is the 2 hour charts, 150 SMA, but that would correlate with the weekly charts, top one standard deviation. So, if you do get this breakdown here and you get a nice pullback to that 25.50 level, that would be a great opportunity to lock in some. What I would say is some long-term calls. The U.S. dollar will be quite strong here, just with inflation, um, and then when interest rates get raised, definitely uh, will get a strong bounce here on the U.S. dollar. And then, oh yeah, ARC. So I'm kind of watching ARC. ARC has been selling off pretty hard. I do think ARC, which is currently sitting at 96.18, you can see that on a more micro perspective, as far as this day-to-day trend right here, you can see on the 2 hour chart, it has been in a strong downward trend. It did pull down to its 150 SMA, tried to hold it, and then break out of this downtrend, but immediately got it rejected by that middle BB and then flushed straight through the 150 SMA and has been trending downwards ever since. Unable to really recover that middle BB. Now, as you can see here, it did break above that middle Bollinger Band, and as it began to pull back, it's starting to hold and stay within the band. So what I would look with ARC going into next week, I would look to see if this 94.76 level holds. If that 94.76 level holds, and then you do got that bottom two standard deviation, which is sitting at 91.64, which will correlate with that last dip, which is right here. If that holds, then that will give ARC a double bottom, and then we possibly get a W pattern breakout to the upside to potentially retest this 108 level, if not 114 level with ARC, and that 114 level will correlate with the 2 hours chart, 150 SMA, which is currently trending downwards. Same with the RSI. You can see the RSI was trending below its averages with each rejection, and now finally broke out to the upside. And as it pulled back, it's kind of holding above its more long-term average that we have here. So we do want to see ARC hold that level. Again, I do think the market is in a position as far as going into next week to have a short-term bounce to try to recover some key levels of support that the market did break through as far as a lot of the individual stocks. So the same thing with ARC. We're kind of watching that to see if we can get that W pattern breakout to the upside and possibly get this 15 to 70 point spread to the upside on ARC for some short term option trading. Now, again, if it fails at 94.76 and then comes down and fails this double bottom pattern, then the plan is to take puts and take ARC all the way down here to its weekly 150 SMA, which is currently sitting at 81.36. And then we'll see how ARC holds with that 81.36 level. But other than that, my plan going into next week as we pull back up ticker SPY, just the overall plan going into next week is to go with the flow with the bulls. They definitely have control right now. If you look here, the daily chart is in a consolidation hold pattern. Again, if it's in a strong uptrend, you'll see it trend above that bottom one standard deviation. And if it's in a strong downward trend, it'll hold below that bottom one standard deviation. But anytime it's between that top one standard and that bottom one standard, you are in a holding pattern for some consolidation. And as you can see here, when we had that strong pullback, we immediately recovered that bottom one standard, and now we're pushing that top one standard. And again, I'm looking for a small short-term pullback going into next week, nothing major, to try to lock in some more long-term calls. Because again, the daily is consolidating on a day-to-day basis. And when you finally do get this breakout to the upside, if that's the direction SPY is going, and that's what it's showing us right now as it pushes through its old high. If you do get this breakout to the upside, then again, you are looking at that 480 handle to the upside with a more long-term price point of 500, which the bulls are targeting. And we will definitely take that ride to the upside. Now, just be more cautious going into next week again. Fed Jerome Powell does speak on December 15th. And just got to be mindful of what he puts out. As long as what he puts out is more in line with what the market is expecting, then you will see this bullish trend continue um, to the upside. Now, leading up to him speaking on Wednesday, again, you may see the bulls just take it and run it before he speaks on Wednesday. Or again, they may break out just to retest that high and then pull back and kind of consolidate again to see what kind of news or what he puts out come Friday. But that's all I have for the market recap on Friday. Again, TTM Trades, man. If this is your first time coming across, do follow, ask questions, send me a message, and I'll do my best to answer. But till next time, TTM Trades, I'm out.